I think for people who don't pay that much attention to the stock market, there's a good chance they will have heard of the US stock GameStop this year. If we have a look at where it started the year, we go back to about here. End of last year was trading around $19 a share. And then, before the end of January, traded above $475 a share. But if we bring things up to date with this one, loads of volatility over the last couple of months, with it trading above $200 now. Just where is GameStop going to go next? I'll talk a bit in a minute about the reasons for the massive volatility in GameStop, but I've got this on an hourly chart. Perhaps if I change it to a daily chart, we'll get an idea of the volatility a bit better. So you can see it was roughly mid-Jan when it started moving. So it was as low as $20 on that day. It traded as high as 38. If your stock pretty much doubles on a day, that's a fantastic and exciting day for investors. But perhaps little did we know at the time, it was set to go up another 20-fold from here. So the price really starts racing ahead. And then the end of Jan, you can see this last week of January and into February, the volatility was off the scale. On one day, the 28th of Jan, as high as 476, as low as $112. So I'll talk about the excitement behind it, where to go next. I must admit, when it sold off into mid-Feb, I thought that's it. All the excitement's over now, back to normal. But we have seen things pick up over the last few weeks or so. So let me go into a bit more detail. Then we'll come back, look at the chart and see where the opportunity might be in GameStop next. Hello, I'm David Jones from Capital.com. And I thought we'd do an update on GameStop. We last looked at this one back in January, when it really started moving, went up something like 1,000% in fairly short order. I must admit, when it fell back after that, I thought, well, that's it. It's all over, back to normal trading. But we have seen it pick up again in March. So I thought, well, let's do an update, because I think it's always an interesting phenomenon that we've seen this year with some of these smaller stocks. So as usual, in this video, I'll talk about what's been happening, what to look out for. Then we'll go back onto the platform and look at things in a bit more detail. We passed 100,000 subscribers this week, so that's great. Thanks for all your support. Plus, of course, we do these live streams every Friday at 2:30 UK time. If you're subscribed with the alarm bell notification clicked, you get a notification off YouTube when we're about to go live, and we look at all sorts of different markets. Anyway, let's get in and catch up with what's been going on with GameStop so far this year. So if we go back to January, we saw the price go from mid-Jan, around about $20 a share, up above $475 a share by the end of January. And behind this, I think what we can call concerted buying is the online forum, the Reddit forum, Wall Street Bets. There have been lots of discussion about the stock. Plenty of subscribers to that forum started buying in. We saw the price move higher. On the other side were plenty of funds who'd been short GameStop for some time. It's a bricks and mortar games retailer. They were expecting the share price to continue to underperform. If you short sell something, you're effectively borrowing stock, selling stock you don't own because you think you can buy it back cheaper. So there were plenty of institutions that were short the stock. But of course, as the price is rising, as we see more and more buying, those short positions are losing even more money. So we end up with what's known as a short squeeze. And this is where those who are short effectively are scrabbling to buy back the stock. More buying of the stock means the price continues to move higher, and that's our short squeeze. And I think that's what we saw with GameStop earlier this year. One fund was hit so badly during the short squeeze that it needed a bailout of about $2.8 billion from other funds just to basically continue in business because of the hit that it took on GameStop on being short. As I said, it is a traditional bricks and mortar business, but plenty of people are perhaps getting excited at the fact that it's well placed, it says, to move into the digital space. So we may see a transformation of the traditional GameStop business. In the last week or so, we've had the sign-off on the latest US stimulus program. And again, some are speculating that perhaps the checks from this going out to individuals will find their way into stockbroking accounts, online accounts, and perhaps fuel more retail buying of stocks such as GameStop. But interestingly, the US research company Vanda Research says that retail participation, smaller investor participation in GameStop this time round during February and March has been much lower by about a tenth, I think, compared to where it was in January. So perhaps we're seeing something different going on. Let's talk about the levels to watch, then we'll jump back and look at things in more detail. I'll start off by saying I think it's an impossible stock to trade from a traditional point of view because of the massive volatility. And to give you an example of this massive volatility, let's talk about one day. So you can see in the resistance here, the high on the 10th of March, $342. If we look at the low, the support level on the 10th of March, $168. So the share price has traveled from 342 to 168 in one day. And it didn't take a day to do it. I think, that level of volatility, I think if you're perhaps a traditional normal trader worried about risk, is just frightening. But it does give, I think, plenty of entertainment and clearly the opportunities for massive profits if you're the right side of the move. When we did the video back in January, I said perhaps the right position for GameStop was to be short because the euphoria, the stock up 20-fold, had clearly got out of hand. What's the right position now? I think it's a difficult one to call, but let's take a look and see if there are any ideas we can come up with. So I said there, I think it's a really hard one to trade, virtually impossible. I think to trade sensibly, clearly you can click buy and sell and trade it. But I think trying to practice any sort of sensible risk management is a difficult one with GameStop. This is that day I was talking about. So it's only back on the 10th of March, but the price trades as high as 342, as low as 168. And closes somewhere in the middle at 260 on the day. We've seen volatility a bit less since then. But even earlier this week, the 15th of March, it went from 280 down to 204 in a day. So an incredibly volatile stock to trade. How could you trade it? I suppose, for me, it's probably all about price action. If we bring in an RSI, I don't think it's really going to tell us that much. This is a 10-day RSI and clearly went overbought very early. When the price doubled in one day, there's a fairly good chance your RSI is going to go overboard. If you're following the RSI, you'd have missed out on another 2,000% worth of gains. Again, we haven't gone oversold on the RSI. You can see when the GameStop price was really flat in Feb, first couple of weeks of Feb, the RSI was pretty much flatlining. So I don't think the RSI is adding much to this one. I think we're going to have to flip this over to an hourly chart and just focus on the price action and come up with perhaps some strategies. So this hourly chart here, going back to middle of January, captures the volatility for this year. And you can see we had gaps back at the end of January where the price closed at a certain level one day. So for example, on the 26th of Jan, the price closed at $143 a share and opened the next day more than doubled, opened at $310 the next day. Lots of volatility. Then we have a gap the other way from early Feb where the price closed at 220 and starts trading the next day below 150. So a lot of volatility going on. Looking at what's been happening more recently, for me, I'd be tempted to focus on just simple support and resistance, previous highs, previous lows, that sort of thing. And I think if we look at this spike move here on the 10th of March, where the market or GameStop trades as low as that 168 level. So 168.80 is the level I've got here. Let's call it 160 for sake of argument. I think what's interesting, a few days later or 6 days later, 16th of March, trades down to 170. So over the last week or so, there has been an appetite to be a buyer of GameStop on trips below $200. At the time of recording, I think the close previous day was $208. So perhaps we've got an interesting couple of days ahead. If we see the price of GameStop get pushed under 200, let's watch and see if the buyers can come back out. But I think this, more than plenty of other markets at the moment, it's difficult to discern any meaningful trend. It is a bit of a roll of the dice. The volatility is off the scale. And I'm sure there are plenty of people still holding GameStop now, with it trading just above 200, who bought it somewhere close to 400, maybe even higher, and bought it just thinking it was going to carry on doubling and trebling and more. So for me, I think it is interesting to watch it. If it does trade below 200, if we get a move, perhaps like we saw yesterday, where the price pushes down through 200, then we get a fairly sharp reversal. We see the buyers come back in. On the upside, I think clearly we have the move to 340. It tries here, March the 12th, to push above 280 to get to 300. It does feel like it's a bit sort of trapped at the moment between that 280 and that 180 area. So for me, if I had to trade it, and I think I'd much rather trade other markets that are maybe a bit more sensible, I'd be watching those extremes. I think 180 to 280, and try and trade it at the extreme. So looking to sell into strength up to 280, and then buy into weakness below 200 towards that 180 level. I think clearly if it breaks through that previous high, that crazy 1 hour candle where the price went from 342 to 168. So it wasn't a day. I think, like I said, it didn't take a day to do it. It actually did it in under an hour. If it breaks through 340, I think anybody who is still short could well be scrabbling to cover those shorts, and there could be an element of FOMO coming in, fear of missing out, and people buying in to push the price higher. So I'd be watching these bands now, and I think if we see it push much below 160, the risk is we go back into at least the range from late Feb down around $100 a share. So it's a fascinating one to watch. I think if you're going to trade it, you need to embrace and expect the volatility, and perhaps not get too carried away with some of the hype around some of these stocks. Personally, do I think we'll see $400 plus again? I don't think we will. I think that the mania back then has happened. We've had a bit of a run, well, quite a run over the last few weeks. I can't see the catalyst to push it back up to those late Jan highs. But as we know with GameStop, anything's possible. We'll come back to it in a few weeks and see what it's doing. That's it for the update in GameStop. Let's see what happens over the next few days. Anything's possible, I think, with this one, isn't it? But from me, David Jones, and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.